Thank you for watching the CEO Barbecue. My name is Antonio, and today I'm taking you with me to multiple places at the same time, really. I'm going to be going to Canada, parts of Canada, as well as Argentina. Joining me on the barbecue today is Lewis Lawrick, the CEO of Magna Terra. Before we get into it, though, I would like to warn you that we have not received monetary compensation for the production of this video from the company that's being interviewed. Please understand that this channel is a business that sells content producing services to companies, which means you cannot rely on this video for research, and you should treat this as an advertisement instead. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. Please only watch this if you know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, so before continuing on, please talk to an investment advisor with a good long-term track record because your capital is at risk, and I am neither a licensed financial advisor nor do I have a good long-term track record. If you're not 100% sure you understand 100% of the disclaimers I just showed you and told you about, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Magna Terra is listed as MTT on the TSX Ventures Exchange, where over the last 3 months, an average of about 140,000 shares have traded daily. The stock's 52-week high is 9 cents and its 52-week low is 2 cents. With a market cap of just under 6.5 million Canadian dollars and 83 million shares outstanding, today this is a 7.5 cent stock with a 50 and a 200-day moving averages at respectively 7 cents and 4 cents. There are no warrants outstanding as far as I know. They expired unexercised during the fiscal 2024, but according to the last filing, there were about 6.3 million options, most of which, so about 5 or so million of which were already exercisable at the time of the filing, bringing the number of fully diluted shares at, and I'm rounding it up here, but let's call it 90 million, meaning an increase of about 7.5% in shares outstanding could be expected if, and that's always a big if, but if all dilutive securities get exercised, which would then also result in about a 7% ownership dilution, again, if they actually get exercised. Management ownership here is recorded at about 17%. Signal Gold owns 18%, and about 1/5 or 21% to be specific is in the hands of high net worth individuals. If I'm not mistaken, Michael Gentile is also part of this story, and that leaves about 42% of the float in the hands of retail investors. The effective date on the last officially filed financial statement is August 31, and the company had recorded just under $1 million in current assets at the time, most of which, about $740,000, was recorded as short-term investments. That was in the form of Gold Hunter shares, which is going to become clear as we're talking through the story. That's, by the way, another company that's previously been grilled on the CEO Barbecue. And on the other side of the August balance sheet, I see no long-term debt, but I do see about $600,000 on current liabilities side, about evenly split under account payables and due to related parties. Now, those numbers are likely to be a little bit different by the time you're watching or listening to this because Magna Terra closed a flow-through financing on February 20 this year for a total of $500,000 flow-through dollars. And in terms of expenses for the fiscal 2024, which was again closed on August 31, the company recorded about $1 million in total expenses, or $937,000 to be specific, which included some share-based compensation of about $82,000, as well as some deferred premium on flow-through shares. So the total out-of-pocket cost was about $885,000. $420,000 of which, or 47%, went toward exploration expenditures, while management and professional fees combined accounted for 30% of the spend, and then G&A was about 18% of it, for a combined non-exploration average cost of about $40,000 per month. And again, this is excluding share-based compensation. As to the exploration expenses, again, that was about $420,000 for the year, or an average of about $35,000 per month, with the largest element being $114,000 acquisition costs for the Canadian project, and geological consulting of $135,000 for all of the projects, so including the Argentine one as well. And there's some assaying and analysis costs, as well as various smaller expenses on top of that as well that you can probably see on your screen right now. Normally, I'd also provide two important ratios here, with one of them being the exploration to administration ratio. I already kind of did that. It's about 47 to 53 in favor of administration. And then I'd usually follow it up with the marketing to drilling spend. But Magna Terra did not spend any money on drilling on the last fiscal year, so that ratio won't work here. But hopefully we'll find out why that was the case and how that came to be, as well as hopefully we'll gain a better understanding of the way the company plans on spending money during its current fiscal year later on in the conversation. As always, though, please understand that I'm not infallible, though I may try, so I might be making mistakes in my reading and or interpretation of these numbers. So it's safer for you to head over to setterplus.ca yourself and make sure you're getting the full picture. For Magna Terra, that full picture is split between multiple early stage assets in different jurisdictions, as I said. So they're across Canada as well as some in Argentina. They have a copper cobalt project in Newfoundland and a gold project in New Brunswick, as well as multiple exploration assets in Argentina, where they're looking for gold as well. They're under an option agreement, by the way, with Newmont, and it looks like that, with that being option agreements and partnerships, that looks like it's the company's or part of the company's business strategy, which again is something I hope to better understand further on in the conversation. But of course, before that, Lewis, thank you so much for being here.
I appreciate it, Antonio. I'm looking forward to it, and thanks for having me today.
Pleasure's all mine, of course. But since this is your first time on the CEO Barbecue, we'll start with the mandatory. Who are you, and why do you think you're the right man for the job?
Well, thank you for that. Yeah. Well, my background, I'm principally an investor. I mean, that's the way I started in this business. I've kind of had two careers, Antonio. I started in banking and trading. I was part of a founding of a small brokerage firm in the late '80s that was sold to one of the Canadian banks in the mid '90s. I had the very good fortune to spend a couple of years working independently in mainland China. Where I got involved looking at a large base metals project on behalf of a consortium of companies. And of course, timing is everything in this life, and that got me to thinking, because I was meeting with high-ranking officials of not only municipal, provincial, and the central government there, and learning about their 5, 10, 15, 25-year plans to mobilize 350 million people from a rural subsistence existence into these industrial centers they were building, and watched them develop infrastructure, build cities. It was quite fascinating. And I came back to Canada, was in a transitionary sort of career phase, and contacted a longtime associate and convinced him to write a big check and start a merchant bank with me, focused on commodities. That was in the early aughts, and we were a little bit early because things didn't really kick off for us till about 2002, 2003. And that company is called Thorson Fordyce Merchant Capital Inc. And I still obviously have that company. I'm the effectively the managing partner. And from there, we started as a traditional kind of merchant lender, and we branched out over the years to founding our own companies, bringing in management teams, bringing in projects, financing them, taking them public. We've had 4 or 5 now. I've kind of lost count. Successful exits from some of these positions through corporate transactions. But I think the most important thing for us is, we are owners. We think like owners, and we exit when there is a transaction. So I've had those situations where how would I call it, the overnight success story took 17 years of patience. I was the founder of Anaconda Mining, which became Signal Gold, which has just merged with Next Gold, to carry on as Next Gold. And been involved with a number of other companies as a founder, significant shareholder, and a director. So it's been an interesting last 20 plus years. Certainly, we had a heck of a boom time in the early 2000s up until the global financial crisis. A little bump again until 2011, but it's been pretty difficult. I think, as most of your interviewees will tell you, in the junior mining space, it's been a pretty hard road for the last 10 years for this segment. But Magna Terra is really right now is my principal focus, and has been for better part of the last 4 or 5 years since we effectively rebooted the company in 2021. And we can talk about that a little bit more as we progress.
Well, I want to talk about specific experience for the task at hand here. And you mentioned
Mhm.
Anaconda Mining, and then it became Sigma Gold, and then it merged with an Australian company, I believe. Um, or I might be mistaken there. But my point here is we're wondering, like, through these transactions, how did that go? I mean, did investors make money on those multiple steps? How did that work out?
Well, Signal Anaconda it's been a difficult one. We started our initial focus when I started the company was I merged my private company with Anaconda Gold Inc., which had a small prospective development in the Baie Verte Peninsula, gold development in the Baie Verte Peninsula. But my company, my private company, was focused on gold and copper assets in the Atacama region in Chile with a partner down there. We had some success down there, and we also had some difficulties in developing the small gold mine in Newfoundland. So there was a little bit of a trade-off. We ended up losing a number of our assets in Chile to focus on refinancing the development of the gold mine. And then over time, that gold mine, it only produced just shy of 20,000 ounces a year, and we had an initial mine life of 5 or 6 years that we ended up operating for almost 12.
Hmm.
We saw gold price go from $700 to almost 2,000. So eventually, it did become a successful investment for ourselves and a lot of our longtime shareholders. In 2018, 2019, we acquired a project called Goldboro in Nova Scotia that our technical team really liked. And that's one of the things I'd like to highlight. We've got, I have a tremendous, technical team behind me, not only in terms of our geological staff that we utilize, but also, our current board. But we saw Goldboro, it was a 700,000 ounce kind of inferred deposit, kind of been kicked around and explored and misunderstood for many, many years in difficult terrain in Nova Scotia. Our guys reinterpreted it. We went hard. We acquired it, went hard drilling it, and you know, it's plus 3 million ounces now pre-development. But we struggled. We struggled at Signal with permitting. Permitting has been a real difficulty, or was a real difficulty, and it set us back. We got offside with our balance sheet with regards to a gold loan with Nabari. Our permitting timeline did not meet up with the loan timeline. So we were really forced into really doing a transaction, which we've just completed. I'm no longer on the board. I am still a significant investor, but I'm no longer on the board of the combined company. And it wasn't an Australian company, just to clarify, Antonio. It's a Next Gold company. Next Gold, which was a Vancouver associated company, part of the Fiore Frank Giustra group. So it's put two companies together that have very sizable pre-development assets. Next Gold has a sizable project in northwestern Ontario at the pre-development stage, and then of course Goldboro is at the pre-development stage in Nova Scotia. So we're hopeful that over the course of scaling up and getting greater market attention, that it's going to see better days.
Yeah, forgive me on the Australian thing. I misunderstood that by reading something, but I know Next Gold and its relationship to Frank Giustra there. Let's go back to the again specific experience for the task at hand.
Mhm.
What about the rest of your team? Has your team or any of your team members worked in similar geologies and or similar parts of the world before?
Yeah, so our key technical team, the people that work directly with me and also work directly with Signal Gold are David Copeland, who's our senior geologist, and our senior technical advisor, guy named Paul McNeil, who's the VP exploration at Next Gold, and Dave also is senior geologist at Next Gold. They also do all of our work. They have been working in Atlantic Canada now for various companies with obviously the Signal Gold team for more than 10 plus years, but their combined experience in the Appalachian sort of or that that terrain is combined is well over 40 years. And I like to think that we have probably the most experienced technical team within that geology. There's it has become, how would I say, if you look back sort of to pre-2010, Atlantic Canada just it didn't have much of a name for precious metals exploration. There wasn't much exploration going on. Large companies were there in the 70s and 80s and 90s, but there hadn't really been much exploration since. And now, of course, Newfoundland is very well regarded. It's one of the best jurisdictions for mining and mining exploration in the world, as recognized by the Fraser Institute. New Brunswick as well. And there's been major discoveries. Valentine Lake, Galway's Clarence Stream in New Brunswick, our own Goldboro deposit at Nova Scotia. Newfound Gold has obviously created a lot of buzz over the last 3-4 years with what they've got going on in that central part of Newfoundland, and it's brought out the bigger companies. I mean, the great thing about that camp is it is underexplored, but it's highly structurally complex. But that also allows for what I would call the right plumbing systems to find these large orogenic deposits that they're now starting to be uncovered.
That's something I hope we can talk about as well, because although underexplored, it is also large and not cheap to explore in either. So hopefully we can get to that part. I want to talk about, or keep going through what I call my smell test. It's always very amusing, but the presentation says insiders here own about 17% of the company. How much of that is you personally? What's the average price that you've paid for your shares?
I own just under 12%, and I would have to honestly calculate it, but it's an interesting. Magna Terra was a company that was previously called Brianor Resources, which was spun out of a company called Normabec that I was involved with. Normabec sold a Mexican asset to First Majestic Silver, and had some minor Quebec assets that we spun out into a newco. I took the company over, focused on Argentina, and then in 2021 we pivoted to Atlantic Canada. But through all of that time, there's been no rollbacks. And my average price is well over 10 cents a share. I've participated in every financing, and I've bought shares in the market. Okay. I have a significant personal investment as well as through, my company, but, well over $1 million invested in Magna Terra.
That's exactly what I'm looking for. Well, first of all, I'm looking for $1 million myself. If you have a spare lying around, please let me know. What I'm looking for here is just to figure out what what's really at stake here for you. How much skin do you really have in the game? So how big of a position is Magna Terra in your portfolio right now?
Well, personally, it's a large stake. In terms of our company, it's a significant stake, but it has its place. In terms of Thorson Fordyce, we have other significant investments as well. But certainly at this point, it's significant enough that it's my principal focus, because if we're as successful as I think we can be with this company, well, not only will our shareholders do very well, but personally, myself and my longtime business partner will do well as well. So it's significant. Like it's so much so that it's where I've got now 100% of my attentions.
Do you plan on buying any shares in the open market with the price where it is right now over the next 12 months?
Yeah, absolutely. I mean, we always participate in the market certainly if we see weakness, we like to, we believe our company is highly undervalued on the basis of not only the assets we own, but also the anticipated financial payments we're receiving. And, we'll probably get into that a little bit as well. It's certainly what attracted Mike Gentile to the company. And Mike's been a shareholder, for about the last 3 or 4 years. And And I just wanted to sort of bring something up from the opening. Michael is now just under 20%. He acquired Signal's block. So Signal is no longer a shareholder, or Next Gold is no longer a shareholder. That's how Michael. So Michael came in the original private placement at 20 cents back in 2021, 22. He's participated in subsequent financings, and then he took the block. So he's got a substantial position and also a substantial investment in the company. Again, probably well over $1 million at this point.
Do you believe that's where the current strength in the share prices come from? Like the last couple of let's call it months, there's been increased volume. There's been there's been buying. Your share price has just gone up. It's closer to a 52-week high than it is to a 52-week low. So is that really what's causing the buying? Have you been able to identify where it's coming from?
Well, I think it was a major factor. Major factor. Obviously, Michael's got a tremendous following. He's got. I've known Mike for several years now, and he's a very astute investor. He doesn't invest lightly in these things. He does his homework. He's liked what we've put together over the years. Enough to invest along, and when Michael found out that the Signal block was available as a result of the Next Gold transaction. And, part of the problem we did face with that over the course of the late months of 2024, we were looking to quietly place that block. It was 18 million shares, not an insubstantial amount of stock. And it really hurt us as an overhang. We weren't necessarily out there, waving the flag around that we had this big block to sell, but we were discreetly trying to find what we would call one sticky or a couple sticky buyers to take it on. And I contacted Michael back in September, October, when it first became apparent that we would be able to market the position. And he wasn't in a position at that time to take it on, but he contacted me in early December, asked if it was still available, and if it was, he wanted to negotiate the purchase of it. So, once that happened, and once that overhang was removed, and once it became public that Michael was the buyer, certainly that brought in a lot of traffic, a lot of the interest. A lot of Michael's followers, I think, have acquired shares, but it also lifted that 64,000-pound gorilla off the offering that was sitting there for 3 months, right?
Yeah. And the stock price seems to have gone through a rough period over the last 5 years, really. I mean, looking at a longer term chart, it went from kind of a high of almost 50 cents down to almost 1 cent at a certain time. And there's been some improvement again recently due to Michael coming in. But what's caused that 98% drop over the last 5 years? Was it really just market driven? And then talk to me more specifically about how you're going to fix it. I suppose Michael Gentile might have ideas or be helping you out in some shape or form. So talk to me about that as well.
Well, our original focus was Argentina, and in specifically Santa Cruz province, where I had some experience before, successful experience with a company called Minera Andes, and a colleague by the name of Brian Gavin, who I sat on his board of his company, and Brian was the founder of Minera Andes, and Minera, you may recall, but Minera is the original discoverer of McEwen's Los Azules project, as well as the San Jose project. And Brian was the discoverer of both those projects. Well, Brian was my partner in a company called Franconia Minerals, and then basically in early days in Magna Terra, when we pivoted to Argentina, Brian passed away very unfortunately, and kind of left us holding the bag with the Argentina assets that I really didn't know a lot about at the time. We did advance them. We did drill a discovery hole on our Luna Roja project in I believe it was 2018. I don't quote me on that. It's been a while, but we just couldn't get any traction in a difficult market with what was going on with the government transitions down in Argentina. You had the Peronists go to a business government, back to the Peronists, and of course now there's a lot of interest in Argentina. It's actually been a little bit refreshed with Mr. Milei taking over and his very, very pro right wing, pro capitalist, pro business, whatever approach you want to call it, and certainly it's developed some global investor confidence in the region. The currency control situation still are in place, but the black market rate for the Argentine peso is not nearly as severe as it was, a year or 2 years ago. So, being in Argentina at the time really penalized us. And you know, when we decided to pivot to Atlantic Canada, we did take a big hit in terms of the transaction we did. And when I said originally there weren't any rollbacks, that was in fact, factually incorrect. When we did the transaction to acquire the Atlantic Canada assets, we did restructure the company at that point in time. So that is why you will see such a drastic sort of valuation change. We did take the opportunity in concert with that transaction to restructure the company. So my average price is probably even higher than I suspect.
Well, you bring up an interesting point, which is building up a shareholder registry of people who understand strategy and will follow you to whatever you want to do instead of kind of jump ship when stuff like that happen. Talk to me about your share registry building strategy from now on out. Like, what's the profile of the people you'd want to attract as an investor? Because that's something that at this valuation, at this stock price, that's well, should it is or it should be one of your main things that you're thinking about.
No, I'll be honest with you, I've been very fortunate in this business over the last 15 or 20 years. I've had some very, significant retail, high net worth brokers, high net worth individuals, family offices, quasi institutions, I guess you'd say, that have invested in our companies and for the most part made money. So they've been very patient with us in everything. And as not every deal, our business is very high risk, and not every deal works out. And what we recognized, Argentina wasn't giving us traction, so we did pivot. And our shareholders, for the most part, our long-term shareholders, all stayed with us and basically re-upped with us when we rolled that transaction out. It was coming out of COVID. There was a little COVID bump. We raised $5 million, acquired the two exploration assets, one in New Brunswick, one in Newfoundland, from Signal at the time, because they were non-core focus for Signal and weren't getting the attention because all the focus was going on the Goldboro project that I'd mentioned. And my intention with my investors has always been, you got to give us 3 years. This is not the exploration business is not it's not an overnight thing. You have to have patient capital. So you have to have people that understand it. And if you can't sort of get that commitment, I just, to a certain degree, I don't want your money, really, and that's kind of the mantra that we've gone with. And so we've had patient capital. We have significant shareholders, Michael, ourselves we're owners, as I mentioned. Our whole team has participated all the way through this. We have some other names in there. Power One Financial, the guys, Pat DeCapo and the guys over there have stuck with us. Lonnie Saul at Pacific Roads. We've had, I could go down the list, but we've got a number of high net worth other individuals, some big book retail brokers here in Canada that have stuck with us. So it's been, our focus is always about, I hate to use the word, but having sticky shareholders that are not only there long term, but will also, continue to facilitate, participate in the financings when you go to market.
We'll talk about marketing later on as well, and that's when you can tell me where exactly you go looking for those sticky shareholders. But to go back to a couple of more points on the smell test before we actually get into talking about the assets in your plan for 2025, do you or any of the other board members or executives personally own a royalty on any of the projects that you have right now?
No, I that's something that I just from an integrity perspective is something we won't do. I mean, we want our the assets to be owned by the company and the company's shareholders. And so that's our focus. And we do have a reasonable royalty portfolio from some of the projects that we have optioned or sold and retained a royalty with. That's the kind of thing that's kind of buried in our valuation that nobody really knows about. And as the CEO, I need to do a better job of communicating, this bucket of assets that we do have.
And then again, that's something, the strategy behind those assets is very interesting to me. So it's something we'll talk about as well. But just on the royalty part, you don't have it personally. And for your non-arm's length parties, like your company or anybody else, that's also nobody close to you owns a royalty either.
No, nobody
Okay.
close to us with any royalties.
Right. Well, that about does it for my initial smell test, as I call it. I do want to talk about the assets that you have. Starting really, first of all, with the number of assets. You have a notably high number of assets for a company of your size. What's the strategy? What's the business plan? What's the end game with these assets?
Well, I'll break it down into sort of two halves here. I will talk Argentina, and then we'll talk Atlantic Canada.
Sure.
Argentina, we have a quite a portfolio that was basically left over from previous iteration of the company that before we pivoted to Atlantic Canada in 2021, 22. We have an existing purchase option agreement with Newmont on one of the properties in that portfolio called Boliadora. We're entering year 4, I believe, of that option. And Newmont's done a great job advancing through, what I would call very difficult exploration terrain, advancing that project to the point where they've identified a significant, what they call a Newmont size target, 8 by 10 kilometer target, on strike with their existing Margaritas vein structure that they're commercially mining now at Cerro Negro. The option payments from that Newmont option basically cover all of our expenses in Argentina. So everything else is carried by that. So we leave that money in Argentina and let it cover all of that. And now, we've gone through some pretty tough times in that part of the world. And, I often describe, our business at the early stages of exploration. I almost kind of look at it as real estate. Sometimes you got to hang on to your real estate, for something to happen next door to you, for your value to increase. And that's certainly what's happening in Argentina right now. There's a lot of, there's incoming interest from juniors, mid-tiers, et cetera, back into Santa Cruz province, which is, really historically I think it's the best province for gold exploration. It is elephant country. You've got Cerro Negro, Cerro Moro, Cerro Vanguardia, McEwen's project there, and it's very underexplored. Cerrado Gold is operating at Don Nicolas. So but it's also difficult terrain. It's all under significant volcanic ash cover. So there's very little outcrop. So it is difficult, but we've maintained our portfolio there, and now I've signed a number of CAs. I've got an agency agreement with an Australian group. We think we're going to be able to probably generate some monetary value for one or more of our properties down there here in the very near term. And these projects are getting no value in our portfolio, so that'll be a real win for us and our shareholders if we can do that. Turning to Atlantic Canada, that is where our exploration focus is. That is where we're spending our money and looking at developing our own projects. During the last couple of years, it's been hard markets, and we made a conscious decision, when we had a market cap of $1 million, $2 million trading at 2-3 cents, not to blow up the capital structure through doing a de minimis financing that really wouldn't advance the projects materially, right? So, it was a tough decision. A lot of companies will We'll continue to raise money. We'll continue to pay themselves. One of the things you mentioned off the top is we have some payables in there, and about half of it is related party. Well, my CFO and I, we went 2.5 years without a paycheck. It didn't make any sense to get paid if we weren't doing anything. So, those monies were accrued, and when we get the cash ahead, we will catch up. But that's, but during that whole time, we've invested our own hard dollars in the company to advance it. We participated in every financing. So, part of that strategy when we did make the decision not to dilute, not to harm our capital structure, to protect our own shareholding interest as well as our minority shareholders. We said, what can we do to advance the projects? We don't want to sit here dormant. We have assessment costs. Time is your enemy in the junior exploration business because the clock ticks. Costs still accrue with regards to the projects. You got to spend money on them in order to keep them. So, we did go out and we did a deal last year with, as you mentioned off the top, with Gold Hunter, with what was really transformative for the company. Gold Hunter has had some very nice success. They did a roll up on the Bay Verde Peninsula, acquired some exploration assets, and then turned around very short time later and sold those for significant profit to Firefly, the Australian group that has consolidated the Old Ming mine and the Rambler deposit, and has had tremendous success in the market with that strategy. And they're getting, they're drilling it off and having wonderful results. I'm very excited for how that project shone the light on that region. And I knew the guys. I knew the principals at some of the guys behind the Gold Hunter story. I was talking to them at PDAC last year, and they were looking to do it again in Newfoundland. They love that part of Newfoundland, and we got together with them and worked out a deal that was good for both of us. The nice thing for us, while it's a great option for us, we're receiving cash and marketable securities. We're giving up we'll give up 100% of it if they get all the way through the option, which we anticipate they will. But we'll end up being one of the largest shareholders, if not the largest shareholder in Gold Hunter. The key for us, though, is we maintain kind of what I would call technical, not only kind of project management, but project execution. They don't have a landed technical team, so we're doing that work for them, with them, and it's generating some revenue for us at the same time. So we're keeping our hands in the project, but at the same time, it is under option. Total of $9.5 million payable over 3 years in the combination of cash and stock. That was transformative for us. We've got this year coming up in May between the Newmont option and the Gold Hunter option, about $3.5 million in cash and marketable securities payable to us by mid-June. So fast forward another year, by the end of 2026, there's another almost $6 million coming between those two companies. So almost $10 million payable over the next 15 months to us. And we have, as you said off the top, a $6.5 million market cap that doesn't even account for our other 100% owned exploration assets. So,
What do you think?
We're investors.
Why do you think that is, by the way? And I'm sorry for interrupting here, but that's actually a good point. $6.5 million market cap. You have those commitments coming in. Is the market not buying it? Does the market not believe you're actually going to receive these payments? Like, what's happening? Why is the share price here now?
Well, I think a lot of it is like anything. It's not done till it's done, right? It's not money till it's in the bank, let's say, right? So I think that's part of it. But I also think it's we have come from 2 cents in the last 3.5 months to hit our 52-week high. There's still, in my view, lots of room to run, but at some point you run into some selling, and we've seen that the market it's trading quite well in the 7 to 8 cents right now, but there is some stock that's coming out that I would attribute to some people who bought it much lower. But I also think we haven't been out in front of the story for the last 1.5 years, 2 years, because we haven't been able to do much. Well, that's changing now. So now we're generating, we're developing a marketing program and generating, one of this, like talking to you today, generating some, how would I say, some marketing intelligence out to the investment community to basically inform people that this is a pretty darn interesting story. And for a guy like Mike Gentile to invest what he's invested and get in front of it. I think he did an interview with Peter Grandich where he said it was like picking up a $50 bill on the street. It's he called it free money, and kind of that's where we're looking at it. Is once those funds come in, and then we will commit to generate using those funds to generate significant exploration activity on our 100% owned projects.
Can you maybe talk to me about how you actually create value outside of a discovery with these multiple projects? Because maybe give me an example of how that's worked in the past for you or any other similar company that you might be modeling yourself after.
Well, and that's a good question. We get called prospect generator, where we're not a prospect generator. And I have no issues with prospect generators. But that's not our model. Our preference is always to commit our own dollars to our own projects, preferentially. But we will obviously pivot in difficult markets to look at ways to preserve shareholder value and also advance our projects. So we will make hard decisions, at that point, to potentially bring in partners to move our projects along, which is what we've done, with Newmont in Argentina and Gold Hunter here in Western Newfoundland. But I think what makes us unique is we have the ability, and we've shown this over many years, not only with this company but other companies, to identify very good projects that go on to discovery stage and potential acquisition by larger companies. That's why I'm in this business. I'm not a mine builder. I don't believe exploration companies do a very good job of transitioning to development. I think it's a mistake when exploration companies do that. I think it's like anything else. You should stick to your knitting, and what we're very good at is sourcing early stage projects and moving them along. And we have the technical team behind us that is very adept at doing that and has had a lot of experience and a lot of success. So, to me, that's it's that track record of having previous successes with our team, not only with Magna Terra but with other issuers we've been involved with.
Is there a company out there that you think like, oh, I like what they're doing, I want to model our company after that company, like a specific example that you can give me as to what Magna Terra could become?
Wow, that's well, it's kind of it's a good question because it's funny you asked that because we have had this discussion internally. What are we? And it's one of the things in life that is useful to do is to look at templates that have been successful and to examine those situations as to what made them successful and take those call it those lessons or those learnings and try and apply them to your own situation. So from that perspective, I think one of the companies that we and again, it's within Atlantic Canada, one of the companies that has had a lot of success and is kind of certainly more well advanced than where we are at our stage, but is Altius as a quasi royalty, but also an asset identifier, an asset developer. I wouldn't say that's the necessary model we're looking at, but it's certainly something that is attractive to us. That we acquire things at an early stage, we move them along. We either have success with them ourselves, or we get them to a stage where we bring in companies that have bigger balance sheets to move them forward faster than we can, right? And then you have a retained interest either through shares, royalty, cash, or a combination thereof, right? So that if there was a model, but it's not exact, that would be something that's a company that we think a lot of. there's very few, one of the questions I get a lot is, well, how, as a tiny market cap company, can you advance so many assets at the same time? Well, we can't, right? We have to focus. And so we've got a couple focus projects right now that we've highlighted that we're going to move along. And then, the rest of our portfolio, we don't want it to sit there dormant. We would like to bring in, partners on those assets, either on an acquisition basis or an earn-in basis, to see them moved along so they can generate value for us and our shareholders. But so I guess you'd call us a little bit of a hybrid, really.
Altius, and to go that route, because that is an interesting example. They've got paying royalties, right? That's
They
in
do.
part they're a royalty company. Is that something you're going to go after? Like, are royalties something you want to do? Because I believe with your last deal, or when you did a deal on some of the Argentine assets, there was no royalty on it.
Well, we do have a royalty, a prospective royalty on the deal with Newmont. It's a
Hmm.
2% NSR with a $20 million US cap, and they have the ability to buy back 1% for $2.5 million. But we have a small portfolio of royalties from some of the other assets that we've parted with over the years. A couple projects in Quebec that we retain a 1% NSR on that are moving forward with other companies. So none of them are paying royalties yet. None of them are paying royalties yet. I have had inquiries from some of the smaller and mid-sized royalty companies about our royalty portfolio, but we're not prepared at this point to sell them. We think, there may be a stage, or maybe a point at some stage that it would be more advantageous value-wise to look at that. But we're not there yet. So, they're assets in name only. They're not paying, they're not generating cash for us. But there certainly is a possibility that they could generate cash, either as an operating royalty going forward, or as to monetize them through a sale, right?
I believe Altius also does or has done spin-outs. Is that something you would consider doing?
Well, absolutely. I mean, that's certainly one of the things that we talk about internally, and I have talked about with Michael, is, we have this large portfolio in Argentina, and if we get a better market, is there an opportunity for us to spin out that entire Argentine portfolio
Mm.
into a new co? We can say the same thing about New Brunswick. We've got two disparate assets, one in northern New Brunswick, a new thing we've just put together that we're very excited about, called Rocky Brook, in the Bathurst camp. And then we've got Cape Spencer in the southern portion, very exciting gold project that we've had for 3-4 years. That is, it's a look-alike for Valentine Lake. It's a look-alike geologically for Clarence Stream. There could be an opportunity to spin those assets into a, call it, a New Brunswick focused play. So we retain that optionality, and we certainly think about it a lot as to, what's the best way to move things forward, what's the best way to return value to our shareholders. So it's certainly, I think in terms of spinouts, and I know I did watch the interview with, and I know him too. You had a few months back. They just spun out something, and it's certainly something they've done before. I think the timing when you do that, the market is a very important feature of when to spin a company out. I think it's very difficult to do that in a difficult market. I think the time to do it is when the market's a little more, I'm not going to use the word buoyant, but I think receptive, and financing is easier.
Yeah, I think you might be talking about John Mark
That's right,
Stud.
John Mark Stott. Yeah, yeah, absolutely. Yes.
Well,
Yeah.
I want to talk about what you do in the meantime as the market is maybe not receptive, or as you don't have the market beta as a tailwind. And I want to talk about what you plan on doing with these assets specifically. But again, given the
Mhm.
size of the company, the question of money is probably a better place to start. And I understand you have some commitments from some other companies, but talk to me about your current cash position as well as what you plan to spend it on.
Sure. So we just raised, as you pointed out, $500,000 in flow through. We also have the Gold Hunter 7 million shares, roughly $700,000 worth of, call it balance sheet value, we're not in any rush to sell those. They're there, in case of, liquidity necessity. We've got coming to us, as mentioned, in the next couple months, $3.5 million in cash and marketable securities. So between the flow through and the cash that we have coming, we are going to, get busy on our own projects. We're currently in the middle of doing a very significant data compilation at the Rocky Brook project in New Brunswick that we've recently just put together. Actually, as of last week, we added on with another acquisition there. We're very excited about that project. We've been interested in the Bathurst camp for a very long time. Geologically, I think, parts of it have been well looked at over the years because it is a very historic camp. But then, I believe the western extension of that camp has not been explored very thoroughly, and I think that's where there's some unique opportunity. And certainly, Puma Explorations, they made a significant gold discovery there at their project that they have optioned to Kinross in a very favorable deal. And that's opened up the camp to gold exploration and not just base metals or critical metals exploration that has historically been part of the camp. And not only, but high grade gold exploration. And and I think they're onto something there. I think we see it in, we're starting to see it in the compilation work we're doing. Lots of historic literature. I mean, we're going through 80 reports as long ago as 70 years ago from major companies that explored the area. I mean, the Bathurst camp has been going for 100 years here. So there's been there's a lot of material to go through, but there's lots of high grade, significant VMS camp, significant structures, polymetallic, and in this day and age, I think exposure to multi-element metals is something that we are attracted to in terms of optionality, obviously, right?
Yeah. I want to go back to the first point that you made, which was, or one of the first point, which was those shares of Gold Hunter that you own. Wondering about how you monetize them, because for them to keep paying you, they have to prosper. But for you to monetize these shares, you have to increase the pressure on their stock price and therefore potentially lower their chances for success and then this for their chances for delivering on their contract with you. So it's kind of a conundrum. How do you get out of it? How do you actually monetize these shares?
We work with them to place those shares. It's very simple. And I've been in this situation before with other companies where we had, we were either the company that the investor had a kind of similar situation, had a large stake, or we had a large stake, and that was part of the I would say the unwritten agreement going in is we're not going to. It would be totally in our against our best interest if we punished the stock in the market and buried the bid, sort of thing. We just I'm an old trader, and that's just not something we're going to do. I mean, if we need to sell any shares for whatever reason, the first call I make is to Sean Kingsley, the CEO, and I get him involved and I allow him to try and place the shares for us. That's the tacit agreement we have, and that's what we'll do.
Right. What else are you spending money on this year? Well, I suppose G&A you're spending money on. As I mentioned at the beginning, that wasn't all too high for the last fiscal year. How much is that going to be this year?
Yeah, we average between $30,000 and $40,000 a month in overhead, and that's been pretty consistent for a long time, Antonio. As I say, we run a very lean group here. We have no employees. I'm not an employee. I consult to the company. My CFO consults. We call it fraction. He's kind of a fractional CFO to a certain degree. He does work for other companies as well. The same thing as the person that does our IR and the same thing with regards to our technical team. I mean, so that allows us to be very nimble. Not having call it employee overheads is useful in this business when things get tough. But also, we're also looking to scale up here because we've got not only the Great Northern project for Gold Hunter to sort of run and in their own public statements, they're ramping up to do a major drill program this late spring, this summer, that we'll be very involved with, and our team will be very involved with. But we've also, we've got project, our Humber project in Western Newfoundland. We're going to fly a full airborne survey, and there we're going to do prospecting and a full prospecting program there on select areas, and geochem survey, etc. So on Humber, that's what's the focus of our work in the spring, summer this year. That's probably going to cost us north of $400,000-$500,000. The bulk of that is going to be that major survey, because it is a 40,000 hectare land package. So it's not a cheap airborne survey, but that'll give us a big data package that doesn't exist for that project, and we're very excited about that, because that's something our technical guys worked up in-house. So it was a proof of concept thing that they worked up through their own research on lake sediment analysis in the region. And it's the type of thing that I think other companies are starting to look at it going, well, this is interesting, because this part of Newfoundland has never been looked at from a sediment hosted stratiform copper cobalt sort of situation, despite the fact that there's lots of high grade copper, high grade cobalt, trace elements, throughout the system in lake sediments, but it's never ever really been looked at systematically that way. So we're getting a lot of attention with it. And then shifting over to New Brunswick, the Rocky Brook project I'd mentioned up in the Bathurst camp. Once we complete the data compilation, we're already seeing, multiple opportunities for press releases coming out of that compilation, just in terms of some of the information that's buried in historical reports with regards to old drill results, high grade samples, potential for significant anomalies through old gravity surveys that we're discovering. So there's a possibility, and I'm not going to sort of pin myself to it, but depending on what we uncover with the compilation, we may find some targets that we may want to walk on and drill this year. And but we're certainly going to do certainly going to prospect. We're probably going to do some infill geophysics and infill geochem on areas that are a high priority to us. And if there's something that looks tantalizing, we very may well drill this year at Rocky Brook.
Talk to me about drilling and what the right time is for drilling within the concept of the market. You mentioned that earlier on, but is now the right time for you to go and, at this market cap, again, what, $6.5 million, do another round of capital raise or find a way to finance in whatever way the drilling, and then actually go and drill? It is now the time where the market is going to care about your drilling?
I don't think so. I honestly think that we've got news coming from Newmont in the work they're doing in Argentina. We've got news coming from our own work with regards to compilation at Rocky Brook. We're ramping up for Gold Hunter to put their program together. They're talking internally, and they've spoke publicly about a minimum 10,000 meter first phase program at Great Northern. So that's all newsworthy stuff for us, that as well as the payments that are coming to us by end of May, mid-June. So I think what we would do is I think we utilize those catalysts to potentially generate the news flow that may support and advance the stock price into more, what I would call, a more realistic and fulsome value. We don't need to raise money. We've covered with this recent flow through raise, we've covered our assessment obligations for the year. We're participating through the junior mining assistant programs, both New Brunswick and Newfoundland. So, we'll get grant money back that'll be hard dollars that we can reapply, into our exploration programs. But we are getting significant cash, not only from the management, etc., of the upcoming Great Northern program, but also the payments we're receiving. So we will utilize that cash on a non-dilutive basis to advance our projects from an exploration perspective through the summer. So if there was a time when we talk about, drilling, it would be late this spring, early this summer. But, with that, we're not compelled to raise any further capital. We don't need to. Now, if we identified a target that we wanted to go drill 5,000 meters and we had the market cap to the valuation that would support a raise that would, how would I say, raise the floor price or reset the value of the company at that point in time, we'd think about it. But right now, we don't have, we don't have a need to do that.
What about marketing in that case? I mean, we talked a little bit about marketing at the beginning. You said you want to start going out more and telling the story. Are you going to
Mhm.
be spending more money on marketing this year?
Yeah, I think, we'll certainly enhance our budget. What that is, I don't know right now, but we will enhance our budget. We really haven't spent any money on marketing in the last year and a half, 2 years, to be honest with
Mm.
you. But I think and I'm sure you've had this discussion with many CEOs that you've had on your show here, on these interviews. Is um, it's a difficult expenditure in a difficult when markets are difficult. It's difficult. It's hard to quantify the value of those marketing expenditures,
Mm.
right? I've always been kind of, maybe call me old school, but I've always believed I've always felt I'd rather put the money in the ground and advance the projects than some crazy marketing program to pay someone, when they can't give me the benefit of a guaranteed rate of return, right? But we're utilizing, I think what's changed in our industry over the years is communication is way different than it used to be. Like, for example, what we're doing today, a YouTube interview. Social media is so absolutely important. Doing these type of things, getting your news, your story, your presentation, out in the various formats. You know, whether it's LinkedIn, Instagram, X, Substack, Reddit, like you name it. I mean, there's so many different places to grab eyeballs, and I think that's as an industry we need to do a better job of getting into those, call it those market opportunities.
Well, is that something you're going to be doing? And what is it that you specifically want to do? Like, do you want to go and work with someone? Do you want to do it yourself? What do you plan on doing?
No, we have our own in-house. We generate our own, what I would call, social media information, right? And we try to do that on a regular basis, and distribute it, push it out through those channels. But we're also very close to retaining an individual to assist us um, with that process. This guy's got a company that. Um, Younger eyeballs, let's just say that it's in a different audience. So we're going to give him an opportunity to demonstrate that he can generate some investor interest for us, through those channels. But again, I mean, I'm if it works, we'll throw a little bit more of a budget at it. But I'm always tentative when it comes to marketing from the standpoint, I want to make sure that we're spending our money properly, because we don't want to waste it. We don't want to waste it.
When you say spending money, and specifically spending money properly, are we actually talking about cash here, or would you consider paying for some of these expenses in shares? How do you treat and how do you think about your own paper?
And I struggle to issue shares because I think those shares come back. Would we issue stock options? Absolutely, as part of a consulting arrangement, and we've done that before. Um, um, so my preference is, a little bit of cash and some stock options, and to have some, certainly some milestones attached to those things, such that they're earned and not just given. And we do that with our own our own consultants, our own employees, right? In terms of whether it's shadow equity or stock options. I mean, there's a vesting requirement, right? So I would do the same thing, and we have done the same thing with any contracts we have on a marketing perspective. Is like, let's hit the milestones and they're earned, and you get them. So.
What about related party transactions or the due to related parties out of your last financial statement? Is that something you typically take in shares, or would you eventually pay it back in cash?
We have done it. We have definitely taken in shares just to reduce the balance sheet number. We've done that in the past, and certainly we're more than open to do that in the future. And we did participate. We all participated in this last round of financing. I think it's important for us to show, and this is across the companies I've been involved with over the years, is we want the board and management to be owners, that we want them to have their money, their capital at stake, just like the shareholders. So we want to be viewed as being aligned with our stakeholders, and so we feel it's very important that we have a significant ownership stake, and a lot of people always ask me, well, how much founder stock was issued and at what price? Well, there's no founder stock in this one because this was a spin out of another company. And, so all of the paper that I own or our CFO owns or our other team members and board members own, that has been paid with hard dollar cash, either through open market purchases or through participation in the financing rounds.
Well, this actually does raise the question of insider compensation here for me, because looking at the last officially filed management information circular, your total comp was $120,000 Canadian. That is, what is that? What are you basing that on, and what could my expectations be for where that might go up in the future? Is it based on share price performance? Is it based on transactions that you do? What is it? How do you determine, or how does the board determine how much money you make?
Well, it's funny you asked that because um, in much larger companies than this, and I've been the chair of the compensation committee. So,
Hmm.
so I can get into compensation discussion. Yeah, uh, significant compensation discussion. We we obviously subscribe to a number of the compensation consultants, for a number of the companies I'm involved with in terms of getting their reports on annual comp to, across the tiers of our industry. We have brought in consultants to review, our compensation practices and basically tell us, are we in line with our peers? Are we below our peers? Do we exceed our peers? Well, I think if you looked at the MICs of a number of other peer companies, you would find that we are very, very on the low end of how we get paid. Um, um, and I think I mentioned before, the fact is there was a period of almost, more than 2 years that we didn't take our pay, and that it just accrued. So, to answer your question more succinctly is, yes, we have a board, we have a comp committee. There will be a review. Um, I make a consulting base. We issue some options every year as part of, the upside compensation or incentive compensation. Um, it's very difficult as such a small market cap or mini cap company to kind of adhere to a big company structure that way, but we do our best to have performance metrics. um, you know, Financing, you know, maintaining market cap, generating opportunities with regards to acquisitions or divestitures. We've got a number of performance milestones that way that I get reviewed on or viewed on, and my CFO as well, and our technical team.
Well, why I'm asking this, Lou, is because I'm trying to overall better understand what success looks like for you in 2025 and how you defined it. And
Mhm.
in 2025 specifically, because you're not, you say you're not highly likely to drill. I mean, you don't think now is the right time to do that. Marketing you want to do in house, and I understand you don't want to overspend on that, but Michael Gentile has already been disclosed. I suppose that gives you a little bit of a bump in marketing as well. But what are the specific catalysts that you can create in order to move the share price?
Well, as I said before, I think we've got a number of things, lined up. And when I said, we will drill if we see the opportunity, some, what I would call low hanging through our compilation effort at Rocky Brook. If we see something that comes out of that information that shows us low hanging fruit, we will facilitate a drill program, and we will have the funds internally. We won't have to go out and raise those funds. I guess that was the point I was trying to make. But we don't know that yet. So that's why I've couched that. In terms of catalysts, we've got a number of things happening, at our partner projects, as I mentioned, in Newmont's exploration and potential maiden drill program at Boleadora. The option payments coming from both Newmont and from Gold Hunter. The Gold Hunter drill program that's anticipated for at Great Northern, later this spring, early this summer, and then our own work on our own projects. So there's lots of marketing material there that we can get out in front of not only ourselves internally, but with the consultant that we are bringing in to assist us in terms of getting that information out there. So I guess my point of all of that is I don't think you have to spend an inordinate amount of money. Like I'm not, in terms of marketing, I think you can do a lot of this smartly, and that's one of the things that people have given us credit over the years is that we don't blow up our treasury. Because we're owners, because we're we think like owners. We every decision we make is calculated. This is not a lifestyle company for me, and I know that's that's a statement that a lot of people use about our industry is. I own 12% of this company and I've paid for it in cash. You know, I will win when the shareholders win, right? When we make a discovery, and I think we will, on one of our projects, or one of our partners makes a discovery on, on one of our option projects, we're going to have some significant success. So, to quote, Seymour Schulich and Pierre Lassonde, those guys never took a paycheck, and that never hurt them, right? So, we kind of think the same way. I think, our view is that we're in this business because we love it. We enjoy the day-to-day challenges, and we earn just enough compensation to keep us moving. But where we look to win is when the company's going to have success and the share price is going to get rewarded. Our shareholders are going to get rewarded as a result.
But when I'm asking about catalysts, I'm thinking about what does a discovery look like? So I understand there's work happening in your partner project, but what is needed to move your share price? Because what would move, let's say, Gold Hunter's share price is not necessarily something that has to move your share price because of the part ownership there. So
Well,
how do you see it?
So they're going to issue to us. We already own 7 million shares, so they've got to issue to us $2.7 million in shares by early June, right? I mean, right now their stock's trading at 10 cents. I don't know if their stock will be trading at that, then, but that's a lot of stock. That's 27 million shares at 10 cents to issue to us. So if we have, 20% of their company, let's say, I'm just throwing out a number, and they make a discovery, or, and they drill a discovery hole, or they have significant good results through their drill program, we will benefit. Our share price will benefit based on the significant ownership stake we do have. Will it be will it move as well as their share price? Well, no, because we only, we don't have 100% of the project. We have a 20% equity interest, but we will get a bump. And the same thing goes for, what's happening with Newmont on Boleadora. Like, If they drill a discovery hole there, you know, it's within 15 kilometers of the head frame of Cerro Negro.
Hmm.
They don't need to find a 5 million ounce deposit. This is brownfield exploration for Newmont. Um, Anything they find there is going to end up going through the mill, is going to end up generating that royalty, which is going to generate value for us, right? So those things are catalysts. Are they the type of thing that drives our stock price from 8 cents to 40 cents? Probably not, but they're incremental. And then so far, in terms of our own project, if we do get on Rocky Brook, and for example, we see this large gravity anomaly that is in the literature, and we can prove that it's there through the analyzing and compiling the geophysical data. We may contract a rig and go put 5, 6, 7, 8 holes in it. And if we hit something, some sort of VMS system that indicates based on the gravity anomaly that there's something bigger there, well, that's a big story. That's a big story. That'll get us a lot of attention. And that's 100% owned project for us. So there's within this year, there's a number of things on our own, number of opportunities, not only on our own projects, but on our partner projects to potentially, deliver that type of discovery news that, every guy, every man, every exploration geologist, every CEO in our business is always hoping for when we do this.
Talk to me a little bit more about Boleadora, because we didn't talk too much about it. But what's the state of the contract? What does the contract look like? Can Newmont just walk away? Do they have to make some commitments to it, or like what does that look like?
So we're in year 4 of, I believe it's a year 4 or 5, I can't remember, pardon me, of a 5-year earn-in, and it's to earn 100%. So there's this year's payment, I believe, is 150,000 US, and then next year it's a $500,000 balloon payment. I believe that's how what remains. They can walk away. Absolutely, they can walk away. Do I think they will? Probably not, because they've got it to the stage now where they've worked it up using, as I say, it's difficult terrain, but they've used their in-house machine learning tools based on the data that they've been able to accumulate from their own experience at Cerro Negro and the same geological environment to develop what I would call a data set that they've utilized in their exploration activities, which has resulted in them generating these targets. One of which, as I said, is right along the main geological feature that the control feature for the Cerro Negro mine. It's called the Margarita structure, and it extends, basically through the top 15 kilometers of the Boleadora, our project. And it's there that they've identified this 8 by 10 kilometer, geophysical, geochemical anomaly along this structure. So do they walk away without testing that? I'd say no, because I do believe, Cerro Negro wasn't part of their divestitures, when they merged with Newcrest. They have divested of a number of what they call non-core mining assets, but Cerro Negro wasn't one of those, right? It's still a core asset for them. And as I met with them during PDAC, and they've said this is brownfield. They consider Boleadores as brownfield exploration. It's within, literally within line of sight of the mill. So we feel confident that they're going to continue, but there's never, in this there's never any guarantee. And the same thing goes for Gold Hunter. I mean, I talk to those guys daily. I sit on the board because of our investment. I certainly know through their public announcements that that they've talked very highly about this is their flagship opportunity, and they're going to pursue it, and they're going to facilitate and execute a significant maiden drill program, or phase 1 drill program this summer. And they're talking 10,000 meters, and that's not insignificant. And that would be the first time that consolidated project, Great Northern Project, will have had that type of a expenditure, a drill program in one phase, which I think is very exciting. It's what it needs.
What is Boleador kind of a make it or break it type of year for? Is 2025 actually a make it or break it type of year for Boleador? Because what I'm thinking, and I know you're not hoping and you're not expecting this to happen, but what if Newmont walks away? I mean, is this the project that's kind of stained with that? Oh, Newmont walked away, and what do you really do with it?
It's a great question. And I think what's interesting here is the history of how we acquired that project. Um, we acquired that project from an Australian company called Kingsgate Consolidated,
Hmm.
a mid-cap producer. They were exiting Argentina back when, political difficulties were pushing a lot of people out. We acquired their subsidiary company for 25,000 US dollars. We rolled the exploration asset into our own subsidiary called Atala, and we had the Kingsgate subco there with a bunch of losses. We sold the Kingsgate subsidiary to a auto dealership in Buenos Aires for 100,000 US dollars, who the company wanted the tax losses. So that project owes us nothing. We didn't, we, we really, other than maintaining paying the taxes and maintaining the call it the title on it, through the requisite payments and making the property reductions as required by the provincial government and so forth. We have not spent a whole lot of time, a whole lot of effort exploring it. Newmont came to us. And that's why we acquired it. Was because it was proximal to the Cerro Negro infrastructure. So they've worked it up. They spent a lot of time and a lot of effort, and not an inconsequential sum of funds in exploration dollars over the last 4 years to advance it to where it is. Um, I would be surprised if they walked away, but anything can happen in this business. If it came back to us, again, it owes us nothing. It's paid us well. So, we would still have optionality with it going forward. It's a 50 plus thousand hectare significant project that I'm sure somebody else would have interest in.
Well, that's an interesting path to go down as well. I mean, you mentioned there's opportunities to monetize the Santa Cruz portfolio too. What does that look like? Who's that someone? Who's that potential buyer? Like, where do you see these assets fitting in terms of, you don't have to be specific. You never know. I mean, this is forward looking at these things, but what's the profile of a potential buyer here?
Well, I think there's a number of potential buyers, and when we've been active, I have approached over the last couple of years with regards to our Luna Roja project, the guys at Cerrado, but Cerrado has had their difficulties, so that they've been sort of working through that. But in terms of a natural kind of transaction or transaction partner, they would be kind of a natural one because it's very close to their Don Nicholas infrastructure, 35, 40 kilometers as the crow flies. But there's the Australian juniors that, there's a number of companies. The Australian junior market's been much more buoyant than ours has been here in Canada for the last several years. And there was a bunch of junior IPOs done over there where a lot of cash was raised on what I would call questionable projects. So there's a bunch of companies sitting with cash, and they don't have great projects. And those are the kind of guys that are knocking on our doors right now, as they're looking, and they like Santa Cruz province because of its history. It is elephant country, high grade gold, high grade silver. It's pretty easy to explore. If you want to build a mine, that's where you want to build it. There's nothing there. There's very few people that live there. It's almost a high desert. So And then there's then there's other companies in the vicinity that that have kicked tires over the years and now have gotten and I won't name names, but we've got a couple companies under CA that are looking at it right now that would be that would make sense, that they have operations within the province or nearby provinces. So I think it's very probable that we will do something with one or more of those projects here in the next 12 months.
Does it have to be a single deal for all the projects, or could you also transact them individually?
I think we would be flexible. We would be flexible. I mean, one of the things that was raised to me with an outside agent was, geez, this portfolio would be great as to give to some, for a company to use as an IPO. And
Okay.
so, we're open to dealing on a project by project basis or dealing the entire portfolio. I mean, we as long as it makes sense to us and our shareholders, like we'll listen.
Lou, this has been a good first conversation to have, a good initial introduction to the company. I know you almost have to go here, but what keeps you up at night? That's something we didn't talk too much about. What are the main risks here for Magna Terra?
Well, I think what's kept us up at night over the last couple of years has been lack of call it lack of liquidity in our story, also lack of capital. Well, we've kind of cleaned those two things up simultaneously over the last 4 or 5 months, so we don't have those kind of sleepless nights anymore. I think right now the biggest thing for me, and it's more as like from a humanist perspective, is kind of what's going on in the world, right? We've got all this nonsense going on over here with tariff wars and
Hmm.
and it's just taking the attention away, from business, right? People are distracted. It's taking the attention away from business. But what I am hopeful for, and I say this is, being an operator or an investor here in the junior markets here in Canada. A lot of what's transpired here has been actually a good wake-up call, certainly for our industry, for people across this country, investors across this country, is to sort of get everybody out of their uh, the last 10 or 12 years here. I mean, this country, Canada, is a resource. It's just incredibly endowed, resource-rich country. Oil and gas, natural, metallurgical and thermal coal in the West, oil and gas in Alberta, across Saskatchewan, BC, the Delta region, across the country. Multiple minerals, from, whether it's potash and uranium, Saskatchewan, to gold, base metals, the porphyry range in British Columbia. It's a tremendously richly endowed country from a natural resource perspective. And as we're seeing, these resources are very, very important to the greater global picture going forward. And we have to do a better job of putting ourselves in a position from, building pipelines, getting permitting, getting the permitting processes streamlined. It shouldn't take 17 years to build a mine from development, first discovery. It shouldn't, you know. So if what's going on right now wakes us up to fixing those things, well, it's a good thing. And so that's kind of where my hope is, that is what's going on right now gets us sort of moving forward on some of these things that have dragged and have prevented our industry from really going forward. Because this is, this is where Canada is going to shine as the world goes forward, is being able to provide those minerals, those critical input components, to other, all industries going forward. And we've got this incredible endowment. So I'm optimistic that we will fix some of the things that's kind of kept us behind the last few years. That's my hope.
How does that relate to you though, as a junior explorer? And I understand they relate to you in your personal life and to us all for sure, and you're not wrong on them. But how does that relate to you as an explorer?
Well, I think it's all tied together very simply. Is if we can fix these things at a macro level, it drives capital into the markets, which then come down. That filter down into where we are at, because you cannot have a discovery, you cannot have a mine without exploration. It's where it all starts, right? And it's one of the things that has hurt us the last 10, 12 years is we just haven't had the capital going into exploration as we've had in previous cycles, right? It's really, really dried up. And, we need more capital. We need more kids going into, sciences. You don't have technology without these inputs. So I think it's very tied to it is it, it's just it'll bring capital, significant capital into the industry, which, just by nature of it, will find its way into exploration because it has to.
Right. Well, that is the availability of capital is always one of the main concerns that people have. So I can understand where that's coming from. Good, Lou. I'm gonna let you go. I know you have to go now. Thank you so much for doing this. Hopefully, we can pick it up again soon as you go through these developments. But I really appreciate your time.
Antonio, it was my pleasure, and I really appreciate it. And I would like to pick it up again. That would be great.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."